Hey, hello, how you doing? I'm gonna do a weekly recap of all the days the last week which we had, and to see potential entries for the first presented fair value gap, to see what we took and what we missed. Well, honestly, I didn't take any first presented fair value gap entry other than one day, but I didn't trade it the other days because I was busy on some personal matter. But let's go down to let's go down to a 1 minute chart. Go back to Monday over here and see what's happening. This is 9:30 opening, 9:30 open. We got our first presented fair value gap here. Oh, this entry I took this trade. I took this trade from here until here because I knew there were equal lows down here and I was targeting those. This was my stop and it just pushed down. Look at this, first presented inverse fair value gap Monday. Such a good trade, simple as fuck. Okay, let's go. I should not say that word. It was simple as a donkey. Anyways, let's go. This is Tuesday. Tuesday, first presented fair value gap was this. Oh my god, again, look at this. It's beautiful, isn't it? We could have entered here. I didn't do this, but we could have entered here. Stop at, I'd always do 20-point stops. We could have targeted this low-hanging fruits, or if we can look somewhere here, we could have targeted some other points. Maybe this area, but it's too much. I normally do a trade of 30 points or 45 points, something like that. So let's go down to 1 minute. Tuesday, another inverse first presented fair value gap trade. Amazing. 30 points on a mini, that's like $800. Sorry, $600. And then we could have targeted more. We could have done this. Took the fib from here and could have targeted this area or more, even -1. It went to -1. It did, yeah, it did, but not. We could have done 0.62. Anyways, Tuesday was another inverse first presented fair value gap entry. Let's go to Wednesday. So on Wednesday, let's see, what do we have here? Ooh, would we have lost this trade? Let's see. We made an inverse. I would see trade here. In a 20-point stop, I would have lost this trade. But realistically speaking, we try to do this. If you were generous with your stops, you could have targeted this low and it would have been an amazing trade day. Okay, so the good thing about this thing is that what you can do here is, we broke structure and we have an order block right over here. We could have entered over here, so when you see things like these, you can mix other stuff with it to make it more strong, and then we can just go down. I did not take this trade. I did not trade it on Wednesday. Okay, let's look at Thursday. Thursday. This is our first presented fair value gap. Yeah, we would have lost this trade clearly. Break of structure. This is a prominent fair value gap over here as well. This one broke, went up. So I think it was news or something like that. Or maybe it was, oh yeah, it was a non-farm payroll Friday, and on Thursday, as an ICT trader, we are encouraged not to trade. See, look at the stupid thing over here. Well, we made equal lows over here on that day. Yeah, it would have been taken out. Let's look at this on a 5-minute chart. Thursday, right? Let's look at this. What is happening? Ooh, we made a fair value gap, break of structure. I don't know why it went down here. Maybe news. And back up. Institutional order flow entry drill. Let's go. Okay, that's why we should know more things, but we just want to keep over understanding towards simple first presented fair value gap. That's a loss. 3 wins and 1 loss. Okay, let's look at Friday. Our first presented fair value gap should be prominent. We cannot take stupid fair value gaps. Okay, this was before I think right after the news, and 9:30 is here. A prominent first presented fair value gap is this. Look at this. I personally would not. I mean, we could trade actually this one, you know. But we should have a correct bias over here. So looking here, this looks like a good, what is on the right side? Okay, it does come down here. Well, that was, I didn't look at that. Let's look at here. Low hanging fruits, guys, low hanging fruits. The nearest lows. This is the nearest low. Okay. What we can do here is, if we had taken a short here, let's suppose we could have taken a short here on a 20 point, we would have lost. But if we were like, okay, we should always do the 3 candle stop, we would not have lost, or rather it would be a winning trade. 1.77 ratio. Or again, as we discussed on that other day, we have an order block here. We could have taken this entry and then a 20-point stop, go down. So this is good, right? We should be aware of what we are looking at. First presented fair value gap with an order block and a break of structure. We should always take an entry with the order block and a break of structure, because it will go up. And if we only want a 20-point stop, it will stop us out. But if we take the entry from the order block, we are good. Look at this. It happened before as well. And we can target the opposite liquidities. It did took that out, went up, took this out. I would have entered here again, honestly. I would have entered here. Yep. But I was done for the day. 20 points, 20 points, 20 points. 20 points. Look at this. 100-point move. ICT took this trade. He showed us the executions. I did not. So it was a pretty good week. I don't know why I didn't take advantage of it. This, I knew it will come down here. I just missed the entry. Don't catch the moving candles. You should always see the entries. I'm not gonna catch it. If I was on a 1-minute chart, I would have taken an entry here or here, or even here. You look at this, all these fair value gaps giving us entries right about here as well, because it's gonna go down here, I'm pretty sure. What I feel is, this is what I feel. It can go down until here, and then it can go down on these equal lows as well. And then we have this London low. This is what I see. Okay, good week. We'll talk to you soon.